Hello, can you guys hear me?
Yes.
Okay, good. Great. So we can start. Good morning, everyone. Welcome to another edition of Finance Daily. A lot of things happen in the past 24 hours. We have today a special guest from Singapore and Japan, Raymond Wu, who's going to discuss two things about private equity and angel investing and startups over there. And so we have Christopher Deutsch also, who's another angel investor who joined the space. And I'm pretty sure they'll have a great discussion with Brendan, who's also in the space. So that'll be good. We have a few earnings to discuss. We have Moderna to discuss. We have Scott Bessent and Donald Trump, of course, to discuss as well. We have a number of different things. So let's get started. I would say let's get started before we do everything else with Moderna, because everybody's been talking about it. It went up 170 something percent yesterday on the news that it had a drug which was potentially helping to essentially prevent cancer from spreading, or once it's cured, to from coming back. I looked into the details, and what happens with the drug is that you need to use it in combination with Merck's Keytruda medication, and then the combo of both would stop the cancer, which means they sell double product. So there's the financial side of it, that they're going to sell much more, but the market is getting very excited on the news. I'm a bit skeptic, but not totally, totally skeptic. Like, it may be possible. This is again for the audience what was promised, that the mRNA technology could be fine tuned to essentially take on any molecule you want. You can program it, so take on any cancer you want, etc. It seems like they're having a bit of success. Let's wait and see that for the real application. But this is what the company at least is declaring. And if you see the chart, I mean, it almost double, triple price yesterday. It's going back to pandemic levels. If you remember, Moderna went like a 400 plus during the pandemic on the euphoria that this technology would indeed promise to not only help with COVID, but also with cancers, and be able to be personalized eventually for each cancer of each person. If you remember, everybody, back then, 6 years ago, this is what we were talking about. And so I think this should be mentioned. And let's see if the technology comes. I would not chase it at highs like that. On the contrary, it might even, if you want to enter the stock because you really believe that it will cure cancer, and there's a good chance it may, it's 50-50 for me because I have no idea, then I would recommend you wait for a pullback. Never chase a stock which is rocketing. Always look for a pullback. This is my personal opinion on that. David Nikoski, you have your hand up?
Yeah, a couple of things. The vaccine was used in a specific type of cancer, melanoma. So, I think it's kind of early to say that this is going to be, across the entire spectrum of all types of cancer. So, just be careful. You get a stock that, shoots up like that. I was bullish on it, put a piece out less than a month ago, I think it was. I was bullish on the entire, biotech space, which has far outperformed anything in the market, for the last year, even versus stocks. So, keep that in mind. But, just sometimes we put the horse before the cart. I think there was about 30+% short interest in Moderna prior to this news. So, be careful out there. Don't do dumb things without me. Um, I wouldn't chase it up here. Let it come back for several days, and more information will come out. But I don't think it's. I think that it was just too far too fast, and people just wanting to jump on a momentum trade. So be careful. All right, back to you.
Yeah, all right. Thank you very much. Let me give the quick news on Walmart. The revenue is at 187 billion. It beat by a little bit only, plus 5.9% year over year. I want people to remember that we have inflation as well. So this is about a normal growth. It doesn't mean that we have 6% more stores or something. It means that the total revenues are up in nominal terms, so 5.9%. So bear in mind the inflation level that we have, which is pretty close to that as well. Yeah, I mean the real inflation, not the government, the published inflation, which is cooking numbers in a very strange way. We talked about it many times. Adjusting earning per share, 81 cents, estimated 74 cents. So they have growth there. E-commerce sales, and that's the one which I hit me, plus 23% globally. So Walmart is trying to go more and more e-commerce. It's still very far from Amazon, of course, which is the king there, but it's trying to develop its e-commerce side. Not bad, 23%. And essentially, I think in this environment, Walmart will continue to be strong because we're in an inflationary environment, and as people, live paycheck for paycheck for a lot of people, they'll continue to go to the Walmart and the Costco and the whatnot to get for their necessities. This is just a reality of life that we're in, and we have to continue with. And so there it is for that sector. At least it's still as expected, I would say. No surprise there. Guys, 2 days ago, did you discuss the Scott Besson? Because I saw that Carlo, you posted a very interesting article on the yield curve control and what was happening there by Andreas Stenos Larsen. Did you guys discuss it, or shall we discuss it today?
I think it ties into a broader narrative that this shift in policy, which I've been talking about for some time now, that I think Treasury is going to be taking the lead in global monetary policy, and Fed is going to be taking a back seat in that, is playing out in real time. And it really reinforces the notion that they intend to run this economy very hot, and stablecoins are a part of that I've talked about. But what it did in the crypto sector yesterday, I was on a show talking about this SEC regulation that we teased yesterday, and I was talking about there still are challenges for the crypto market to rebound, and I didn't think that just the SEC proposed rules would be enough to drive markets. Well, we had a catalyst of three things yesterday, Eric. We had this SEC announcement. We had this huge White House summit with the crypto sector and the heads of both the SEC and the CFTC all at the White House. And then we had Besson doubling down on absorbing treasury notes. And that catapulted Bitcoin, which overnight went over 72,000. And Ethereum is well over 2,000 at this point. And that does not seem to be cooling off this morning. So there are many indications that this strategy is starting to play out, and it is reflecting in the crypto markets, the risk asset component, which I've been talking about, which depends on the promise of liquidity. And like it or not, call it yield curve control or not, it is the U.S. policy, and you can either trade on it or you can get left behind. What the long-term effects of this are, I know Dave will have some strong feelings on, and I can't argue with him about that. It's certainly a factor, but this is what's playing out, and I don't think anything's going to stop it. Back to you, Eric.
Thank you very much, Lumi, and then David Nikoski.
Yeah, wasn't it one of the biggest short liquidation events in Bitcoin history yesterday? I think second biggest one ever.
Massive.
Yeah, it was It was actually really kind of funny. In my opinion, it was really kind of funny because for a while I've been watching them kind of like beat Bitcoin, and it's kind of nice to see some repercussions for easy money. The other thing was it was really interesting because when they were talking about Clarity Act, everyone doesn't understand this, but they're talking about buying treasuries, a lot of treasuries, basically. And every time they talk about that, they're talking about buying a lot of treasuries. And everyone's looking at the Fed balance sheet and worrying about, oh, how is Scott Bessent, going to be able to buy all these treasuries? He's going to have plenty of room. He has $2 trillion room from when the Fed was at the high water mark. So he's at 6.75 trillion now. 8.95 trillion was the high water mark. So they've got plenty of room to play this game with treasuries. They've got a lot of room if you think about it. And I think that we're in a situation right now where Carlos is right. They might run this economy quite hot indeed because they have room to do that.
They probably will run it hot, but just a little comment here, because yes, it was the maximum 8.9, but that doesn't mean it was a good thing. It was a bad thing. It was emergency for COVID, and then they printed like hell. I wouldn't try to go back there, but I think they will try to go back there because governments are addicted to money printing.
Eric, I would say this, good or bad, and I've mentioned this before, every print needs a crisis. So whether they manufacture a crisis or whether it's an actual crisis, there always has to be some kind of a justification for this. They know that the deficit is exploding at uncontrollable rates, and they know that the long-term bond is where they need to try to get rates controlled. The short-term notes are killing them, and they have to do something. And I think this is the plan. It's been the plan since the Genius Act passed, and it's really interesting to see it play out for me in real time. What I've been calling the Besant Doctrine, this third act for the dollar, I think is really starting to take traction now.
Thank you, Carlo. Yes, indeed. And that'll be very good for both gold and Bitcoin, because if we continue to print and print and print, well, what do we do? Yeah, this is what the result. David Nikoski?
Yeah, I'm not sure that it was as much printing as everyone sees. They're talking about a 2 billion going from 2 billion to 4 billion. And all they're doing is, trying to take the long end down. Historically, you don't get a COVID type action until the market's down significantly. We're down what, 2-3% off the high. We're taking action, and I honestly I have to ask, what are they seeing that we're not, doing this, down 20%.
They're seeing
So
a midterm election coming, Dave. They're
what's
seeing a
that?
midterm election coming. Maybe it's
No,
Xi,
I
Xi coming.
realize that, but I think there's something brewing, in my opinion, as well. If when you say, terms like risk on, the momentum basket was down extremely hard yesterday. It was one of I think the top 5 down days. The Nasdaq, the XLK, the SOX index was down, and you had everything in staples breaking out. And obviously, as I mentioned yesterday, you had yield, you had the banks that were not very strong yesterday at all. As I've mentioned before, I'm seeing more topish type patterns on, Goldman Sachs, Morgan Stanley. You're taking that net interest margin down on a lot of banks as well, but the banks were weak across the board. So from a technician's perspective, I don't have to come up with all the things causing it, but it's an observation of how, investors as a whole are reacting around it. And then I jump into, the reasons why. So Lumi might have a better explanation of it, but I see some troubles up there. So Lumi, why don't you take it and give me your thoughts?
Yeah, my thoughts are kind of convoluted, but this is my thoughts. If you knew we were in an AI super cycle and copper prices, which are key to like building out everything, are at all-time highs, what would you do consistently to try and allow for the AI super cycle to be built out? Create bad news. And this sounds really weird, but this is good and bad news in a weird way. Why would you protect the market at all-time highs? Look at the dollar weakening. How did that benefit Japan and their carry trade? What is America actually trying to do? It's probably trying to protect its trading partner, Japan. And all these weird things are happening in like lockstep, kind of at a time when we're kind of getting to a point where is the 1987 crash, which kind of feels very similar to right now. And David, I might be a little wrong in this, but there was the Iran crisis at that time. There was issue with trading bots, flash crash in the market. There was short selling, which was happening out of nowhere, and a few other things which happened. And it kind of feels a little bit familiar, right? And so I think that in a weird way, I might be wrong in this, but in about 5, 6 months' time from now, we'll look back and we'll be even higher. And it's like, how did we get there? It's like, well, because the bad news comes in as the good news comes in, and it gets very hard to kind of predict things. And I don't know, maybe we are in this AI super cycle. It could last for 2 years. And this is something which people have been talking about more and more. And if we are, it has to link up with the Clarity Act and the Treasuries have to link up at the same time. And all these things are kind of coming together at the same time. And if this all comes together correctly, it could be huge. But if it doesn't materialize, I don't know what's going to happen. At that point, I think it stalls, right? And so, Carlos, I'm watching and I'm understanding a lot more because of the other side of the equation. And I'm kind of seeing the big picture more and more because they need memory to stay at high margins so that the whole economy makes money. How do you do that? You have to push China away to the side and say you can't come in and destroy this market like you did with solar panels with Samsung and with all of the other things you did with Samsung. So that Trump is protecting that market and margins are high. They can continue this game across the other industries which are quite which are quite high in the pyramid of producing profit for America. And my point is this: is that this whole equation keeps going as long as the bad news comes in with the good news, because prices don't get out of line and inflation doesn't get ahead of itself. But if inflation gets ahead of itself, then it stalls. And this is kind of like, I think, a game they've been playing, a high level game. If I'm wrong, I'm wrong. But this is what I believe.
Yeah, well,
Also, remember there's an AI summit coming next week at the White House, and I suspect the White House is going to throw a bunch of fiscal support behind the major models that are building in the United States.
yes, and I want to mention two things here. Because no, we can't have memory prices stay at these levels for long. We just can't, and I'll explain it later when we get to the AI part. And for when David says we need a crisis, and Carlos, well, yes, guys, Trump is about to. He already engineered a big crisis. He's about to double down with Iran because he's out of option. He has an election in 2-3 months, and he's out of option. Nothing works like it shouldn't work. We said it since the start. So he's going to try and double down and escalate whatever he can, left and right and up and down, to try and find a breakout, which he probably won't get short of a full war before November. So Trump is, the clock is ticking for him, and which is what this war now is all about. It's about regime change, regime collapse, let's say in Iran, or regime change in the United States, which means Democrats take the House and go after him for the next 2 years nonstop. We know what the Democrats will do. And so this is what it comes down to for Donald Trump personally. And so he's going to go. Well, we started yesterday. He just posted that he's going to sanction, go after every country which gives any lifeline to Iran economically. He's getting the panic is settling in. Trump is going to go with something big just out of panic. He has nowhere else to go. So you will have your crisis. This is definitely. And we'll pivot to, because with that, they're sustaining Japan, and we'll pivot with Raymond after. David Nikoski to you, and then I'll pivot.
Yeah, on the AI trade, part of that supply chain is, a lot of the engineering and construction companies. I mean, you have every one of them down at least 40% from their high just 2 months ago. So I'm seeing significant deterioration. I mean, when I look at, calling tops is one thing. It can be a very difficult thing, and I can't find. And I posted these back in June, and it's across my X account. But if you look at every single sector inflected against the SOX index, most sectors on a relative strength basis versus the SOX in between, July 2nd and July 22nd are up 50% in relative performance. Okay. Like, I am seeing this everywhere, and it's not something that happens, especially when you have parabolic downtrends in healthcare and staples and, across the spectrum of other sectors. But I see a huge change unfolding. As a technician, I sometimes don't have to question them. But when I have 100% of names outperforming the SOX during that time period, that your statistics are pretty freaking good. I mean, I wouldn't go about betting that I can pick the SOX bottom. It's been tried. You created a bear flag on the SOX. You broke above the 200, sucked everyone in, and then they puked them down again. So I'm just going to say, be careful out there. There's some names that are good. I posed the question on X. Out of 160 semiconductor names, name, give me 5 names that are breaking out to new highs. I think someone reported back 3 names. All of them got hit the next day. AEHR, Avago, and I don't recall what the other. But you're trying to pick 3 names out of 160. That's your probabilities. If you want to bet on a horse and have less than a 1% chance of getting the right horse, you don't want to bet a lot of money. But there's a lot out there, as I've said, since June, that is way outperforming the market. And that's where I'm going to put my basket. Talking about the 87 crash, I lived through it. I went through it. I got laid off in January of 88. Came back, and been in the markets, since that time. So, give you a little, idea of my history, in the market. So, I see, it's historically when you see, foreign markets like Japan, which, it's really their tech side that's been racing. Same with Korea. When these things break, there's a strong correlation between the US equity market and especially tech, which, became over 50% of the weighting of our market. Never in history have we had a sector divergence like we've seen now. The last time I've seen it was in March of 2000. Um, I see a lot of people going back to, railroads in, 1870s, and it's like, yeah, they were the largest portion of the market, and I think they were about 70% of the market. To give you an idea, I think there was 240 names actively traded on the equity market. Over 160 of them were railroads, to give you an idea. We didn't have Walmart, we didn't have Costco, we didn't have healthcare companies. Hell, at that time, your barber was your surgeon. That's why they have the red stripe poles out in front of them. If they can cut your hair, they can take your appendix out. They weren't publicly traded. So let's be rational and say the US was in its infancy. Railroads were the backbone of the country at that time. Nothing more. There's nothing more to say about that. If I hear that one more time, yeah, I just block people now. I don't take the time to, educate them on reality. So, just again, be careful out there. Last night you went from Nasdaq, up 200 plus points. Futures now are down 236. That's close to a 500 point swing. Again, there's so much to do in this market, and if you're focusing on one area, you can't see the forest through the trees. Back to you, Eric.
Thank you, David. And speaking about Japan Tech, this is exactly where Raymond is. So, Raymond, welcome to the show. Thank you for coming.
Thank you for having me.
Oh, your
Good
voice is a
evening.
bit low. Let me boost my volume. And so Raymond, he's representing Kyoto University's VC arm in Singapore. Kyoto University is, I think, Japan's biggest tech university, as far as I know. At least that's what it's reputed for over the last decades. And Raymond, so we just discussed that the US government is trying to essentially print money or inject money to sustain also the Japanese yen. We discussed about this 1 or 2 weeks ago. And I want to know from your side, first, if you can give us an overview of how things are going economically for the tech sector in Japan and in Singapore, and then how they perceive that the yen sustain. Is it critical for them or not? What do they perceive these things are going at the monetary level and for their access to their international market now that Trump is doing a trade war? Can you give us the layout and how companies over there are perceiving things, especially the startup environment where you're in?
Okay, so it's like many questions in one question. So I will answer point by point. You may have seen the news today that Japan's exports have been basically it was the highest in quite some time because of the semicon and AI boom. So that has really resurrected Japan's export competitiveness. Japan is not in the fab space that much, although there's a TSMC fab in Kumamoto and Kyushu. Japan has always been very strong in precision engineering, so the components, chemicals, materials around semicons, and that is booming because the general fab semicon space is booming. But as you know, semicon, basically AI is very variable, so stocks have risen to highs, gone down a lot, and then increase again. So it's quite variable. But beyond public markets, what I see in Japan is an upsurge in entrepreneurship in the tech space. So Japan has this reputation of being, stodgy people, a cop salaryman. That is actually long gone. Young people nowadays, they are really keen on building new companies, leveraging Japan's already excellent basic intellectual property in the universities or in corporations to build new technologies to solve new problems. So I think that's really the fundamental thing going forward. Plus, they are also looking outwards because Japan is, it's a very mature market, but low growth. So they know that a minority of them know that they have to look outwards basically to leverage growth in other markets to mitigate the low growth in the Japanese market. Okay, so what next is JPY, right? Unfortunately, and I think this is a consensus. Policy divergence between the Fed rates and the Bank of Japan rates, interest rates, is the major factor behind the continued JPY depreciation. So what basically the Fed did was, as you know, right, it didn't sell its its Treasury bonds. It didn't sell its Treasury holdings. It sold its European EU holdings to purchase basically Japanese bonds. So in a sense, because it doesn't want the USD to depreciate. It wants to control US bond use. At the same time, it wants to limit its intervention, so-called intervention, on the JPY. It did appreciate for a while, the JPY. And the US did that because, Japan is a large holder of US Treasury bonds, about 2.6% or so, 2% plus. Not big, but big enough to worry. So they do not want the Japanese Bank of Japan to basically sell its Treasury bonds to buy JGBs, Japanese government bonds. That would be bad for the US. But as you can see, the JPY has been basically relentless. I think relatively relentless in depreciation because the core issue, the policy divergence, is still around. I'm afraid the BOJ has no choice but to continue raising its interest rates. Not to like 1% or so right now, but above 2%. Then only you can see the JPY stop depreciating for a bit. But it's not, again, it's also not just a monetary problem, it's a structural problem. Until recently, Japan's export competitiveness has been declining. But as we have seen, there's an uptick in that right now in terms of its exports. So I think with basically increasing interest rates is really the way to go moving forward. Did I answer your questions, Eric?
Yeah, and what do you think the effect will be if they raise interest rates? Because Japan has been for the longest time in negative or zero interest rate.
I can't hear you.
You cannot hear me? You guys cannot hear me? Sano? Lumi, can you hear me?
Yeah, we can hear you.
Okay. Raymond, can you hear me?
We hear you.
Oh, I think Raymond is having a problem. He cannot hear me. Let me drop him down, bring him back up.
He needs to update the app.
Yeah, probably. Let me just text him that. Let me remove him from speakers and then bring him back up. Just in the middle of a conversation. Not so funny, yeah? Let's try again.
That was a great question, though.
Yeah, because for the longest time, Japan had negative or zero interest rate. It was really the policy there, and they were providing liquidity for the world. But now that they're going to start raising rates, I want to know the effect on the Japanese. Raymond, are you back? Can you hear me?
Yes, I think I missed a few seconds just now.
Okay.
I'm not sure why.
So let me
Could you
just
repeat what you said? Yep.
tell you. So essentially, my question was because traditionally for a long time, 10, 20 years, Japan had negative interest rates or zero interest rates, yeah, and it was providing liquidity for the world. Now that it's going to raise interest rates, what do you expect the changes to be in the economy? How the companies or government perceiving that? What is their perspective over there? How do they view this?
So just to be clear, I'm not an expert in the public markets, or neither am I a monetary economist. But I try my best to answer based on what I've been reading and what I've heard from the industry. So the yen carry trade is basically going to decline. It has already been declining over the past several years, actually. Japan basically cannot afford to sort of subsidize the world's yen carry trade, especially to add to the basically to allow the US to spend perhaps beyond its needs. So that's going to end. It will normalize. The JPY, Japan's monetary policy, I think will normalize. It'll become a normal country in terms of monetary policy. Okay, so inflation, that is after many 30 over years of deflation and or near zero inflation, Japan's inflation is back. It has been consistently about 2% for the past 3 or 4 years. But this is a supply side inflation because of policy divergence leading to the JPY depreciation, leading to higher import costs. Japan imports almost all its energy. It imports 70 to 80% of its food and so on. And it has a huge industrial base, but imports most of the components, especially like rare earths, from China and other countries. So it's a supply side inflation. Actually, domestic demand is still quite tepid, not strong. That is why I can understand why the BOJ is hesitant to increase rates to be above 2%, because it knows domestic demand is still weak, because it's a supply-driven inflationary pressure. So the only way, because Japan has a declining population as well, so that adds to that. And entrepreneurship, new company creation could be accelerated. So that would really increase the rates, increase the growth rate in Japan, and hopefully increase domestic demand.
And the low yen will help for the export as well. So for now, let's pivot to these entrepreneurs and this entrepreneurship space. How do you see it? Oh, just a second. I think Andy, you have your hand up.
Yeah, good morning, everyone. I would just add to like the whole equation that, there's a demographic situation in Japan that's been going on for a while. They're an export-oriented economy, but as you said, there's also a massive amount of imports. Now, typically when your currency is this weak, you can import your inflation, right? Because your exports go up. It just hasn't happened, right, for almost 3 decades now, maybe a little bit longer. So their fear is that if they're not getting inflation going, why are we going to raise rates? Because we don't want to go back to zero or disinflation like they had before. So there's so much fear to raise rates. But the other critical piece here is that their culture is to save. They're a saving culture by nature, and they want to invest. So as soon as you start making the incentive higher to save, that means that there could be less marginal consumption in the economy. So does growth really pick up, or does it drop at an exponential rate as opposed to a linear kind of function in that regard? The other piece, as you look at currencies and you look at the situation, we're no longer, as we try to go back and map how things are going to look like to an industrial age, right? We've been in a service-oriented economy for, a decade or two at this point, and we're moving into what I call the AI economy, a whole different type of regime of supply-demand dynamics, etc. Things operate. We look at this change in this world, especially if a lot of the conversation that we've had around here around digital currency, moving away from conventional banking, changes consumption, changes flight to quality. This changes a lot of different factors.
I lost Andy. Can you guys hear him?
Yeah, lost him.
I don't hear him.
Okay, probably because he's on
Can
the
you hear me,
road.
guys?
Andy, now now we can hear you again. Yes. Oh, he's back out. Let me bring him back again. I think he exited, and then he'll try to come back. Okay, so let's continue on what we were talking about, which is, in Japan, yes, because we have, for the audience, Japan's population is going down, like more than 1 million per year or something like that, like a percent, as the population is aging and they don't have much kids to replace it. I think South Korea is also not far from that. Singapore is not far from that, but Singapore, I think, is replacing by immigration. Raymond, you're there, you would know. And this is a tendency, a trend, which has been there for some time and is continuing, even accelerating by the numbers. And so it's going to factor in the economy automatically, because when you have the declining population, your total GDP or total economic output automatically reduces. It doesn't mean that the population which is there can't be efficient and productive. Japan has been a productive economy for some time and very advanced technologically, so it's capable of many things. But And since we entered this AI era, we remember that Japan was very advanced in electronics and Sony corporations and whatnot. We remember a lot of things that they invented over the 70s and 80s and 90s and whatnot. And now a lot has shifted to China, but Japan is still there. But for that, for new innovation, you do require a startup environment. And Raymond is active in that. He's doing it day and night, the startup environment. Raymond, do you see for the capital? That's the other question I had for you. Do you need to access a lot of the U.S. capital markets, or is Japan and Singapore okay? How do they compare? What's your input on that? Because I know Christopher and Brandon, I think on the U.S. capital markets. Go ahead, Raymond.
So your question was capital, basic
Well, the
private,
startups, yeah.
venture capital in Japan and Singapore.
Yeah,
Is that
exactly.
correct?
Versus the U.S.
So, okay.
and, you know.
They're all fundamentally different markets. The US is, of course, sort of the holy grail for venture capital. It's the world's deepest financial market. It has the world's biggest entrepreneurial pool. Of course, so many unicorns. You cannot replicate that in Asia. Okay, going back to Asia, Japan and Singapore, I think, in my opinion, they are diametrically opposite to each other in terms of their economic structure. So Singapore is a small island, but its density of basically venture capitalists from all around the world and also technical talents is very high, which makes up for the lack of population and R&D manufacturing mass. Whereas Japan has the opposite problem. It has like 120, 150 years of R&D excellence, fundamental research, lots of good engineers and scientists, but it doesn't have basically the global exposure to global financial markets and talent pool like Singapore has. That is why they are extremely synergistic with each other and working closely with Japanese founders, venture capital funds, etc., to globalize, expand out of Japan through Singapore to go to the world, so to speak. I think Japan's capital market is also very massive, but it's a very sort of institutionalized kind of structure. So because unlike the US, in Japan, corporate venture capital, basically the VC arms of large usually listed corporations, basically they provide 70% of VC capital in Japan. And they are not financial investors, not purely financial investors. They are strategic investors who look for synergy with their parent companies. So it doesn't really promote high growth for the startups. And Japan lacks also a late stage VC ecosystem, unlike in the US again. So they tend to list early on the stock exchange, the Tokyo Stock Exchange Mothers Board. It used to be even earlier, but the TSE has instituted reforms to make it harder for startups to go or early listing. So, but even today, you can list at a valuation of 250 to 300 million USD, which is like Series B in the US, I understand. That said, Japan, I don't think, lacks capital for its startups, for the good ones. From my experience, they want, not all of them, a minority of them would like to approach foreign investors, not because of the money itself, unlike in Singapore, where they really require money. But in Japan, they have enough money domestically. What they want is a global access. They want venture capitalists from abroad to help them expand to other markets. They want to help them with basically, for example, a digital transformation, strategic realignment, getting new clients, hiring, etc. So they require very hands-on kind of venture capitalists. Maybe not for everyone, but that's what I'm doing, which is why I really enjoy helping these startups, the founders, on a very hands-on basis. So basically Japan does, in short, Japan does not lack capital domestically, but the founders want foreign access, overseas access. Therefore, they are approaching these foreign, basically global investors. One example. So recently, and actually it's one of my portfolio companies, it's called Yakumo. It's a quantum computing hardware company at the POC stage. So they just finished a seed round. The US VC Alumni Ventures recently invested in this company, and it was Alumni's first ever Japan investment. This is what I'm talking about. Japan wants to look for bridges with the outside world, but you need the right people to be those bridges. It's not for everyone, in my opinion.
I see. Well, thank you very much. Looks like you and Brandon and Christopher might connect with each other. I don't know how much you guys, Christopher and Brandon, are interested in Asia or Japan and Singapore, but these two are very active in the private equity and angel space. But thank you, Raymond, for talking to us about Asia and Japan and Singapore. But for the one last comment here, because for the audience, Japan is, of course, the strongest country in the democracies there in Asia, in East Asia, and then in Southeast Asia, the strongest one in terms of how advanced it is technologically is Singapore. If anybody has ever flown to Singapore, you see how the country is run, very technologically advanced, very organized, very clean. It's like, for me, it's my favorite country on earth. And but it's very small. So in terms of magnitude of its economic market, it is small, but it punches above its weight. And it is right at the nexus of the trade routes. And this is going to be important for the show because you guys know with the war, with the world war, we know that the US wants to control a lot of trade routes and they will collide with China and many of them. The Straits of Singapore, the Straits of Malacca, as it is called. Malacca is a small city on the coast there of Malaysia, where the strait is a bit narrow between Malaysia and Indonesia, where a lot of the world traffic, I don't know, 20 or 30% of the world economy goes through there, something like that. And so it's going to be in the news in the coming months and years because we've seen what happened with the other straits from Bab el Mandeb to Hormuz to Panama to even the North Sea Passage. So we've seen what happened. We talked about it on the show a lot. So we should expect that we might have. This is going to be a critical point that we, at very least, should watch, and maybe something will happen between the governments over there. They have disagreements. So it is a very important part of the world economy. And when you talk about like Singapore is a trading port where it receives and distributes energy, all kinds of products to the entire Southeast Asia and East Asia market. So it is something that you have to keep on your radar when you talk about the Asian economy and even going to China. There's a lot of things stopped by Singapore, and vice versa. We saw with the chips when China needs something, sometimes they go through Malaysia or Singapore to get it. So there's a lot of games being played when there are sanctions being put on, and I don't think it will end right now. Trump is still going to be doubling down on a number of things. He will have a meeting with Xi Jinping next month, so that will define their posturing and what they can achieve. So all eyes are going to be on that meeting, but I don't think the rivalry is ending anytime soon. So I think it is important to say that. Any other questions, comments from the panels before we continue?
If I could ask one quick question, Raymond, one of the big VCs out there is SoftBank, and I haven't heard a lot about SoftBank recently. I'm just curious, Raymond, if you've got any insights around what's going on there. I've actually, I don't know if you're familiar with the Masasan Foundation and Masayoshi Son's fellowship that he has there, but I actually have two, my only two fellows in the Lofty family are both in the Masasan Foundation. So at some point I want to get out there. I love Japan, just haven't visited there yet. But I'm curious, are you familiar at all with SoftBank? What's going on with them? Anything around that?
Sure. SoftBank, the Vision Fund especially, is the biggest VC from Japan by far. I think it's like over 100 billion AUM or something. But for the past many years, it has only invested outside of Japan, not within Japan, until very recently, because their ticket size obviously is very big. So Japan, a lot of very interesting startups, yes, very interesting technology solving problems in a very interesting way. But growth is a problem, scale is a problem. That is why I say they have to aim for overseas markets from the onset, especially the US. Because if they stay within Japan, it will just be too small for the big boys to invest, including Japan's own Vision Fund, SoftBank. Interestingly, Son Masayoshi's younger brother is living in Singapore. He's doing his own thing here, doing his own investments. So Singapore is indeed actually very important for the Japanese innovation and venture capital market, even though it's like 7 hours away by plane. Did I answer your question?
Yeah, I was just curious if there was you heard anything going on. Like, do you know if they're raising a new fund for SoftBank, or if there's anything, any new activity or anything I should be aware of with SoftBank? If you have any
Uh,
insight?
no, unfortunately, I have to look it up. I also just recently got introduced to someone from SoftBank, the Vision Fund. Yeah, I mean, I'll look it up. But I understand that their legacy portfolios, they may need some help, some push, because there are, I mean, like any other venture capital fund, there are relatively moribund startups or portfolio companies that need a lot of support from the VC to grow, so to speak. But I really don't have anything. I'm not privy to anything apart from what's reported in the media in public.
Sounds good. Thanks. I appreciate your
But
insights. That's great.
sorry, one thing. So I mentioned they've been only investing in overseas foreign startups. Recently, in the past, literally 1 to 2 years, they have been looking at Japan again. AI, basically advanced materials, semiconductors, etc. There is a real change in the Japanese letter. Also, Japanese government is backing, putting a lot of money in the deep tech space. I think 17 sectors. The Japanese government will be pouring tens of billions of USD into those sectors. That is also a big thing. And a big topic is dual use, military and civilian use, across many, many different fields. So that is actually revolutionizing Japan, the Japanese innovation ecosystem. Just that the scale is yet to be seen, but I am confident Japan will eventually get there because it's getting a lot of interest from Silicon Valley VCs, Singaporean VCs, and etc.
Well, thank you very much, Raymond. Appreciate it.
Raymond, can I ask a quick question to Raymond as well? That
Sure,
historically, Japan has been a leader in robotics. Obviously, you see Tesla stopping production to increase production of robots and humanoids and things like that. Other startups in the U.S., etc., and across the world. Is Japan still considered a leader, and what does that the robotics side of production and innovation look like in Japan currently?
Unfortunately, and again, I'm not in that industry, just saying in general, I think it has lost out to China quite some time ago in terms of robotics. If you look at humanoids, Unitree, for example, is the world's most advanced humanoid robotics company by far. That's it, because it depends on the type of robotics, the value chain you are in, the supply chain you're in as well. So as I said in the beginning, Japan is very strong in precision engineering, components and chemicals, or even solutions for robotics. So Japan, being a not so big country that it is compared to China and the US, it does have its niche fields. It cannot compete on mass production of basically industrial robots, humanoid robots, etc. But it can service those robotics companies like, say, Unitree in certain things. So, but I do know personally some Japanese robotic startups. So one is in is space robotics. There are a few actually. One of them called Gitai has moved to the US, which is a very smart move, I think. Then there are smaller like literally robotic arms serving a very specific type of like warehouse warehouse area or certain factory floors, certain kinds of manufacturing. So Japan cannot match China in scale, but it can certainly have its niche in certain things that only Japan is good at after many, many years of R&D and experience. So I think Japan should really focus on that. It's a kind of B2B play if you think about it.
Thank you very much. Lumi, you have your hand up?
It was just because some breaking news about the 30-year Treasury erasing the drop from yesterday and basically rising back to the highs in the last hour or so, which I think is kind of interesting, very interesting, because they're not going to intervene again, right?
They might have to intervene a lot for the coming years, especially when they keep the world war going on, my friend. When you're at war, you're at war. Never forget that. That is the number one factor. We tend to forget when we discuss about day-to-day companies. War is number one. When you go to physical war, and financial war is toe to toe with it, because you can't wage that physical war if you don't have the financial mechanism. It's a full scale war, really. Remember, like the Cold War with Russia, it's that scale, but even hotter than that war. This is what we're going through right now. It's just a fact of life, yeah. So don't forget that we are in this environment, and the government that wants to push it further, because the US has an agenda, big agenda, will need to follow through with all this financial mechanism to be able to stay on par. It's just the nature of things. Can't stop that. We got to be aware of it, and that's why I wanted to talk also about the Southeast Asian and East Asia side of things, because this is the next theater of competition and things heating up. We already had Ukraine, we already had the Middle East, and the next one is Asia, which is why I wanted to have a discussion on all these things at this point in time. And thank you very much, Raymond, for coming, for sharing your knowledge. As you see, Raymond has a vast overall knowledge and knows when he doesn't know something, he knows where to get it and how to find it. So I really appreciate him coming in the space, and a very valuable asset. And when we're speaking about Unitree, Unitree has said something yesterday, and this is key. They said that they don't have enough right now. The level of intelligence is not enough for the robot to be autonomous in the society. So that means the AI race, the model race, the intelligence race will continue. They need it for the robots. They just don't have any choice. And so we're going to have this a lot of money being poured into it for the next 2, 3, 4 years, because they need to do the models to get to a level where you can operate a robot safely and the robot understands everything going around him. And that is a very it's just, it is not enough for the robot to understand 90% of things and then screw up 10% and start hitting people or falling on people. We can't have that, right? You need to have a 99.999%. It's not easy to achieve for total safety in society when you have a very complex robot. If the robot is just rolling around and then stopping and then rolling, doing nothing else, like a caddy cart for you to help a senior going to do his shopping, that's one thing. But when you want a robot in doing a lot of things in society, you got to have a lot of safeguards, make sure that he's, it's more complicated than just a simple model. Raymond, do you have your hand up? Raymond? Go ahead.
Yes. So you mentioned about the level of intelligence, artificial intelligence, that is not good enough for truly autonomous humanoid robots, for example. It's a matter of the type of AI. I'm not an AI person. I just happen to read, but I would recommend you all read up Yan LeCun's interview with MIT Technology Review, because he is proposing an entirely new non-LLM based AI. So his version of AI, his model, replicates how a human actually interacts with his world through probabilistic, experiential, basically steps or methods. So you see something, you predict that it will be bad or good, and then you act accordingly, that kind of thing. I think it's a matter of the type of AI, the intelligence behind the robots. It's not just the hardware itself, it's the software as well.
Okay, thank you very much, Raymond, for these comments and these precisions. But I do think, because we talked a lot about AI on the space, and we talk regularly about AI on the space. In fact, I was supposed to have a segment today, but at 8:56, I might have to let Anas speak. Anas, are you ready to speak? Or should I continue with AI?
Yes. Well, move away from AI, right?
Yeah, if you want, but yeah,
Okay.
I'll have more AI, but home AI, I can even do it tomorrow. So if you want to go ahead with the energy segment now.
All right. Great.
Okay.
Thank you.
All right.
There is a tanker, an oil tanker that's been boarded. It's been reported as boarded in the Gulf of Aden, near Bab el Mandeb. But if you look at the location, and I put that in the nest, you look at the map, it is not. It's very far away. It is literally in front of the Omani waters, or close to the borders of Oman, in front of what's so-called Al Mukalla port. And this is very important, because It's been boarded by 6 armed people who are taking the tanker to Somalia. Here's the issue. First of all, the location. This is very important. This is not in the Gulf. This is not near Iran. This is not near the Houthis. This is not near Somalia. This is very far away in front of the Mukalla port. So, why location is important here? I'll explain in a minute. The second issue is something I've been talking about for months right now is be aware of third parties being involved in this environment. And third parties are many that include countries and militias and other groups. Some of them are paid by others or superpowers or others to do things. Others basically look after their own interest. And third parties basically are literally jumping on the wagon of the war that started on one side by the US and Israel, on the other side is Iran. And those third parties basically want to steer the horses in their own way. And now you can imagine what I'm talking about. I'm talking about Russia, I'm talking about China, I'm talking about the Gulf countries and the various militias in the region. So, with the Houthis been striking Al Mukalla port in recent days with rockets, and then this third party basically to board this ship in front of Al Mukalla port. It is appeared to be designed to push ships away from the port. And the issue here is increasing risk, higher shipping rates to this port, and of course, higher insurance rates. So they are literally choking the Saudi supported Yemenis because this is their main port. And we don't know what the end result of this. But at the same time, there is a long term impact that fits with the bigger picture of the region if you are talking about energy dominance and AI dominance, if you are talking about the BRI, Belt and Road Initiative, the Chinese initiative, because this event and the attacks on Mukalla port in recent days, it literally kills all the proposals to build pipeline from the GCC countries to the Indian Ocean. So this confirms that this war is not only about Iran and it's not about the Iran nuclear war. This is way bigger than what it is. If you look at the northern route, that's northern of Russia, it's summertime right now. The ice is melted and it is super active. And we are seeing several LNG carriers going from Russia to China. This is important on several fronts, especially in terms of the number of tankers going through. Some of those are sanctioned, carrying sanctioned LNG. That means China basically is working with Russia to get that LNG. Yesterday, we did talk about the role of Australia in lowering US LNG in the region, and US LNG basically is now diverted to Europe as a result of that. So, you want to talk about energy dominance, think about the northern route and the role of LNG in it, and now the role of Australia in it too. Oil prices have risen by about 3% this morning. This is a significant rise. Brent crude now is above $94. Be aware of what analysts and the media are telling you because they are saying, oh, the increase because of lower shipments through Hormuz Strait and Bab el Mandeb. Look, the market has already discounted those long time ago. Remember, 3 months ago, we've been talking about this long war. So it's been discounted. This is, and since most of it is dark fleet, we don't know much about it, so it cannot affect the prices on daily basis like that. It cannot be. Then how do you explain this rise in prices by about $6-7 just in recent days? So, well, the Iranians are demanding this, and the Iranians are demanding this. Well, Iranians' demand do not affect the physical market. whatever they are asking Trump to do, that does not affect the physical market. So what drove prices this high, especially the physical market, because in the physical market, prices are even higher. What the media basically and analysts are ignoring are two major facts. The first one is, if you look at the exports of crude of the Americas, when I talk about Americas, I'm talking about North America and South America. I'm talking about United States, Mexico, and then you go to South America, you talk about Brazil, Guyana, Malaysia, Colombia, Ecuador, Peru, all those countries, their exports declined significantly from the peak that we've seen in April. And how significant this decline is? It's more than 5 million barrels a day. Why this number is significant? It's not only about being large. Because if you look at the other side of the world, when China reduced its demand of crude, it reduced its demand of crude by more than 5 million barrels a day. So on one side, we have a major decline in demand. On the other side, we have a major decline in supply. But you say, okay, they are equal, then prices should be where they were in the 70s or 80s. But that is not the case. Because the other reason why prices rose, because we lost massive amount of oil from the Black Sea, because Ukraine continued to hit the Russian facilities, the Russian export facilities. At one point, about 3 weeks ago, we lost over 3 million barrels a day. So you look at 3 million here, 5 million here, we are talking about 8 million barrels a day. Massive amount. Why the media is ignoring that? Why analysts are ignoring that? Because they are obsessed with Saudi Arabia. They are obsessed with Hormuz. That's where and our problems in the market, always, well, anything in the market, financial market, stock market, anything else, always, the problem is always obsession. While the first rule of trading is not to fall in love with whatever you are trading. But we have this obsession right now with the Hormuz Strait, with Bab el-Mandeb, with Saudi Arabia, etc., and the focus is there, while really the decline in supply is somewhere else. And I am still kind of really bothered by the idea why President Trump is obsessed with Chevron and Exxon, asking them to lower gasoline prices and diesel prices, while the problem is Zelensky keep hitting the Russian ports that he told him not to hit. So we have a serious problem there, and yet the problem is our own oil companies. Yesterday, the EIA released, that's the U.S. Energy Information Administration, released its inventory report. There was a surprise build in crude. And the amount was very large, but a major decline in distillate, and that increases the diesel crisis that I've been talking about in recent days. And if what the yesterday's report was very important to me, because it confirms the idea that the problem we have right now is about crude quality and it's related to diesel. So for those who subscribe to our reports, basically you've seen all the charts and you've seen all the numbers and all the conclusions on this, that we are in the middle of the road yet. The crisis is not over yet. It's going to get really worse. And the reason why it's going to get really worse, the increase in inventories yesterday that surprised analysts, and I've been waiting for it because I want to confirm the idea that the releases from the SPR, when the government releases the oil from the SPR, where it goes to commercial inventories, and that is what's reported yesterday. Well, why they did not export that? Why refiners did not use it? Well, because all of a sudden, most of the releases from the SPR are light sweet crude that are not suitable to make diesel. And we need diesel. And if you look at what the refiners want, the price of oil today in the United States is in the high 80s. That's the price of crude. Refiners make more than $100 to make diesel. This never happened in history. This is the highest ever. This is like a golden opportunity. Forget about anything you can imagine. The profit that's being made by refiners is just outrageous by any sense, but not because of the refiners. This is because of the dynamics of Hormuz, Bab el-Mandeb, and the Black Sea. So what happened here is we need medium sour crude, and most of what's been released in recent weeks from the SPR is light sweet crude, so it's not going to help. It helped before, now it's not helping. Now, where we are going to get the crude from to get the diesel? If we are not getting it out of Hormuz, we are not getting it out of Saudi Arabia from the Red Sea, and we are not getting it from the Black Sea because Zelensky keep hitting the Russian ports. From where we are going to get it? And again, when I talk about the Trump administration here, the problem is we know trucking is the backbone of the economy, and no trucking without diesel. So are we destroying our economy because we want to hit Russian ports?
Quick question for you, Anas, on that, if I may
Yes.
interrupt, for the audience as well. How much inventories of diesel do we have left before we have a full shortage in the US and then the trucks cannot go around and do their deliveries?
Right now, whatever we have left in the inventories is very little. About, I think I can give you the number in a minute while I'm talking. The issue that we have to pay attention to that diesel right now or inventories are way lower than the bottom of the 5-year range. And most of the diesel, in a sense, we are producing enough diesel, but most of it is being exported. Remember that in the last few weeks, U.S. exports of diesel were the highest on record. So so we produce more than enough. It's just being exported because diesel prices overseas are higher than the United States. But in terms of what is left, again, we are at a very severe level in terms of being very low.
Well, if the crisis becomes full blown, then Trump will put the ban. He will have no choice. Which countries are the most likely to be very hurt in that case from the ban?
Everyone. But let me just emphasize what I said in recent days, that there is no solution. And here is why there is no solution. Because if you look at what is left from the SPR releases in terms of medium sour to produce the diesel, is very small amount. Probably maximum, probably we are talking about 20 million barrels or less in terms of medium sour. So this is like only 3 weeks, and that's it. And the other issue is by that time, US refiners will go on what we call the fall maintenance, so the seasonal maintenance, and therefore they are going to produce less diesel anyway. So on one side, we don't have enough medium sour crude. On the other side, we don't have the diesel. So what's going to happen? There is no way, not the Trump administration, not President Trump, not anyone can solve this issue. And again, the only way Trump can help, basically, he can do two things. He can tell Zelensky to stop hitting the um, export ports, especially for Kazakhstan, because I'm still puzzled until now why Kazakhstan. Wow, there is no war between Kazakhstan and Ukraine, and Kazakhstan is not supporting Russia in the war of Ukraine. So why we lose 1.4 million barrels of crude from Kazakhstan? For what? And then why Ukraine goes and hit the Iranian tankers in the Black Sea? I mean, is Ukraine going to fight the rest of the world? What's going on? So there are too many questions here. And it seems that the bottom line here, I know probably some people will not agree with me and some people might get angry. But look, there is a fight between the United States and Russia, and Ukraine is being the proxy. And there is a fight between the United States and China, and Hormuz and Iran are being the proxy. End of story. Back to you.
Thank you very much, Anas. Yes, definitely proxy wars. Ravi, you hand up?
No, I just want to say, Anas, absolutely spot on, because it's exactly what the larger issue is. And all the media interviews I've done in India, I always say there are multi layers to understand the complexity of what this is and what this is doing to the global economy. Just couldn't agree with you, Anas, that something very big is going to hit us. The more we are prepared through these amazing discussions, the better it is. I have one question on your reflection, and maybe for all the panel speakers on China, Anas, the whole REE, which is, I think we spoke about it earlier. I think if you can talk about the whole, the dance between control over REE and the energy market, and what does it really mean for USA and for the AI-powered world economy as we know it today. It'll be great to get, even Eric, your points will be welcome.
Can you repeat the last part of your question?
And I was saying that, the whole dance between the control over the rare earth elements and how that is critical for the AI-based world economy. And then, of course, the reality that, AI still needs to be, the world still needs to work on energy, oil, and gas. So how do you, the politics of that between America controlling it and China trying to control? So at one point, America has a rather bigger control over the oil and gas, whereas China has the largest share of the rare earth elements and the entire politics of that, right? So if you could, I don't know if you want to share
Yeah.
and talk
Well, you
about
see,
that.
yeah. Well, the United States, it was obvious from many years that it was going to go to war around the world to keep the supremacy essentially of its status, and it decided to go. So that's why there was a proxy war in Ukraine and the Middle East, and then Taiwan will be the next one. But I think we realized in the last few years, even the Trump has realized it, that you cannot win a war like Ukraine or like Hormuz. So he's going full economic war instead. But the problem is China will counter what it can with the rare earth, right? So this will become between the two leaders. There's two things: the two leaders, what they will agree to, and then the deep state, or the war machine, if you want, which will be relentless. That one is relentless, relentless, relentless. But Trump is still a politician, needs to get elected. That comes into the equation. And what does he really want to do? Because he's the most random of all. He has a little bit of an agenda, and then he goes left and right, sabotages his own agenda and whatnot from time to time. I mean, he's alienated the whole Western world bloc, which was the strength of the United States and made it dominant on this planet. So it's a bit clownish on the side as well, right? So it's very hard to predict what the guy is actually going to do from that perspective. However, if you look at the interest of the United States, what they're trying to achieve, they're going to push and push and push. And for that, in Asia, they do need Japan. Japan is critical. So before, let me, Raymond, and then Anas, please go ahead.
May I just,
Sure.
if you don't mind?
Go ahead, Anas.
Okay. A couple of things here in continuation to what I was saying. We heard a lot of news about Trump administration trying to impose additional tariffs and restrictions on transshipment of solar panels and everything else from China. And this is a major issue that people must understand, that the Trump administration from day one, and before that, the Biden administration, for some reason, they did not pay attention in the initial period for transshipment. And we teach our students in Econ 0101, basically, all the time. We teach them about transshipment when you impose tariff or trade restrictions. So I'm wondering, how come policymakers in Washington and people in the White House cannot even understand that we will end up with transshipment as a result? And the reason why Mexico has become the main trading partner of the United States and number one trading partner, and not China anymore, simply because China moved all the factories to Mexico. So why I am saying this? I'm saying this because in the news we heard that Mexico is bragging about manufacturing electric buses in Mexico, and they are praising it as homegrown industry, kind of a greenfield industry in Mexico. And you look at the praise, you look at the description, etc. It's just unbelievable story to make electric buses in Mexico. And then you go into the details and you dig deeper and you find out that the battery cells came in from China. Back to you.
Raymond, go ahead. I see your hand up, Raymond. Yeah.
Yeah, simple question to Anas, who spoke on energy just now. So you mentioned Ukraine, i.e. the Black Sea, and the Hormuz are basically proxies between the superpowers. How about the Straits of Malacca and Singapore? And I literally live a 10-minute drive away from the Singapore Straits, the world's busiest bottleneck. Thank you.
Anas, are you there?
I am here. So was that a question or comment?
I think it was a question.
A question. How do you see the Strait of Malacca and Singapore? Do you think we are also, this part of the world is also a proxy between the superpowers that could result in hopefully not, but could result in a kinetic war of sorts?
Well, it is very clear. If you go and just focus, if you do research for the next 3 years, just on the control of ports around the world, it tells you that story. It tells you exactly that story. That there is this control over the ports around the world basically is part of that proxy war. So what you want to talk about certain companies that belong to certain countries that cooperate with superpowers, etc., of control of the ports around the world. So all you got to do just look at Panama and what happened in Panama, for example. By the way, the government of Panama is now being sued for 1.5 billion by what the name of the group, Hutchinson or something, SK Hutchinson, I think, out of Hong Kong because they were stripped of the contract of Panama. So you look at the control of the ports, not only the waterways, and it tells you the same story. It is really a proxy war.
Ravi?
Yeah, I think it's a fantastic question because I actually did a thread on this about a year ago. I'll try to pull it out. I think there are 3 points, right? One is that the state of Malacca is very, very important to control the supply of China and China supplying to the world. So at one level, it's going up, the oil and gas, and the other level, whatever's coming down for manufactured products from China, that goes to that. And this is where India has been very, very, if you've seen some of the development in Andaman Sea, there is this whole discovery of oil, which Anas can talk about. But they're building a port for the first time with complete full speed, really to counter China and its pressure on India, especially in the north. Second, but the state of Malacca also has kind of changed in certain ways because the North Sea has opened. So because of China and Russia, if you go back to about the news which came about 3 weeks ago, so that's something which they're trying very hard. And I think Anas also discussed some points, I think, in one of these spaces we had. I think that's another kind of a interesting kind of, that's what China wants. It wants to avoid going through that route and take something which is more north. And the third aspect of this really is that the overall balance as of goods and supplies and who controls it, as you know that I've been working a lot right now on smart manufacturing in India. The manufacturing is slowly picking up. It's not there at the China level, but there's a lot of effort that government of India is putting in. And that's why we also spoke about the Indian IMEC, which is the India, Middle East, Europe Economic Corridor. And that's what India wants to see happen. So it doesn't get stuck in situations like that. But now it's in a state of limbo. So yes, from Singapore perspective, it's a very, very important point. Do we really see the same relevance of it like 6 months ago and now? Actually, I don't, because of the North Sea. But will the North Sea work out during extreme winter? That's when, again, this whole dance will happen between the North Sea and the state of Malacca. Thanks.
Anas, go ahead.
Yes, Ravi is absolutely correct. I just put this in the nest. You can see it. This is a report we sent out to clients, I think the day before yesterday, exactly about the same point and how China figured out. Of course, China knew long ago, and I heard this in 2019, that Malacca Strait will be closed one day. And as a result, they are taking action in case if it closes, and that's where the BRI basically came to play. It's just an alternative route for anything that we controlled by the United States and Europe. And the report that we published basically focuses on this idea and how all of a sudden China woke up to the reality after the fact that, oh, now Hormuz is closed, Bab el Mandeb is closed. This is my opportunity to go back to the BRI. And therefore, they can literally supply Iran from what the West called the back door and maintain the closure of, or the partial closure of Hormuz and Bab el Mandeb for the longest period they can, because they already have a lot of things in storage while they are promoting all the BRI projects. And that's what the bottom line of that report is. And as a result, what the implications for everyone here is, for example, if you were looking at Hormuz from the Trump point of view, from the US point of view, and think, okay, well, it will end probably by the election, after the election, etc. Look, this can last for years based on what we are seeing right now. Because this is, again, this is after the fact. This is a golden opportunity. This is a historic opportunity for China now to build on it. Back to you.
Thank you very much, Anas. And yes, this will encourage a lot of nations in Asia to transit by railroad instead of only relying on ports. A question for Raymond here, because we talk about the Straits of Malacca, and this is essentially Singapore and Malaysia. Anas, even to you, how would they close it? I mean, they need to shut down Malaysia or Singapore, or they need to go and take it over. Like, how would they actually close? Or they just send ships to create havoc on some excuse and just block it? How do you see a closure happening there?
All you get to do, there are things that we learned recently we did not know before. All you get to do basically is raise the insurance or stop the insurance. End of story.
Yes, indeed. Okay, I see what you mean. That would indeed create complete havoc there, just like Hormuz. Very interesting, very interesting. And that'll be something to watch. Then that's a boon for the Belt and Road Initiative, which was kind of fading away a bit. Now it's a whole new renaissance for the Asian continent between India, Russia, China, and other countries in between. Very interesting development. Let's keep an eye on that. There might even be some investment to be made for the future in that, on those infrastructures inside Asia that we can keep monitoring. Okay, well, ladies and gentlemen, it is 9:25. So this was a long show today. I think I'm going to stop here and then we can continue tomorrow for whatever you guys want to talk. I will talk about more AI also tomorrow. Thank you very much to Raymond for coming today. Thank you to the panel as usual for the discussions. Really appreciate all of you. And we continue tomorrow, same time, 8 o'clock in the morning. Thank you to the audience as well for following and sending sometimes some valued questions that we appreciate. Sometimes I don't get, when I'm narrating like that, I cannot see all your questions. So I will go after the fact, look at all the comments, and then for the next day, if there's something, we will have the discussion again. Have a good day, everybody. See you tomorrow.